Hi guys, welcome to video 5. This is the video that I'm sure most of you have been waiting for, and if you've been sitting through the previous 4 videos, then I want to congratulate you for getting to this point. I know that the previous 4 videos might not sound like it was as important as you think it is, but it really is. I believe it gives you the background you need to make a success of it. So in this video I'm gonna show you what is definitely my favorite trading strategy, and it's probably the one that I use most often. It's the one that's by far the most successful, and it's by far the easiest one to use, and I would say the risk levels are probably the lowest as well. I mean, it's probably not the strategy that's going to make you the most money, but it's probably the most reliable way to do it. Before we dive into it, I want to point out that I have now put a little blog up on the tradingwiz.info. So I'm going to put all the videos up on the blog. So if you want to, if you want to watch the videos from video 1 all the way through to the end, it's probably better to go to www.tradingwiz.info, and it'd be good to keep an eye on that as well, because I'm going to obviously publish some more videos in the coming week or two, and then I'm going to put up some more resources and some more sort of helpful, tips and hints and stuff like that. I'm not exactly sure what I'm going to do with it, but for now, all the videos at least will be up there. So yeah, let's dive right into it. Now, let me just pose you with a question that I often thought about: is if someone gave you tomorrow's newspaper, what would you do with it? Now, to be honest with you, I probably won't use the information in tomorrow's newspaper to go and buy stocks. I'd probably go and put my money on a sports game, or I'd go to the races, to be honest with you, because it's probably going to be a better bet. You're probably going to make more money out of it. But I mean, since we haven't got that privilege of getting tomorrow's information and seeing into the future, what we're going to have to do is we're going to have to rely on charts, and we're going to have to rely on certain trends and indicators to guide us in making decisions. So this trading strategy I'm going to show you in this video and in the next one is called the moving average crossover method. I mean, it's a mouthful, and it sounds more complicated than it is. It's very basic and very simple. So what we do in this strategy is we look at the stock's moving averages to identify buy and sell signals. Now, if we overlay simple moving averages over different time periods for the same stock, we get certain patterns and we get certain indications as to where the stock is going. I mean, this is it's a pretty old strategy, and there's been a lot of speculation as to whether it actually works or not. But for me, it's been working really well, and I would encourage you not to think too much about it. And, you can go and read up on it if you want. I'm not going to explain all the nitty-gritty of it. It really is you can get into it way too deep if you want to, but let's just look at what a simple moving average really is. To be honest with you, you don't even have to know what it means. It's a strategy and a set of rules that we're going to apply. No one really knows how electricity works, but I'm happy to switch the light on and not think too much about it. And that's sort of the attitude you need to take with this. If you want to really get into it and go and read up on it, then please do. But for our purposes, think of a simple moving average simply as the average stock price over a certain period of time. Okay, it's as simple as that. If you want more information, you got to go to investopedia.com. It's a great site and it's got a lot of information on moving averages, but don't get bogged down with it too much. Okay, so let's look at the rules. Okay, first of all, we are not in this for the long term. This is a momentum strategy. It's a strategy that we use to make fast money. And what we want to do is we don't want to take our capital and buy shares and then wait for 6 months to 12 months, because that means all our money is going to be tied up in that stock. What we want to do is we want to get in quickly and we want to get out quickly and take the profit. So in other words, you want your money to work for you. It's as simple as that. So please, if you're looking for long-term strategies, then go and look for something else, because this is definitely not it. Although you can use it for longer periods, you can, if you're looking at sort of 6 to 12 month investments, you can also use this method. And if you want to read up a bit more, do that on Investopedia, because there are some strategies that work quite well. But for our purposes, and what I'm going to show you next is, this is a short-term strategy, and we're looking to buy and sell a stock within anything from a week to 2 weeks, and sometimes maybe 3 weeks. But we want to get in quickly, we want to get out quickly and take the profit. Okay, so here are the steps. What we want to look for, step 1, is we want to find a stock that's in an uptrend. Okay, I would suggest you just write these steps down. In the next video I'm going to show you each step in detail, but for now just these basic 4 steps. So the first step is find a stock that's in an uptrend. Second step is overlay or switch on the 4-day and the 9-day moving averages for that particular stock. In the next video I'm going to show you where we go to do that, and don't worry about it for now. Just know that we're going to look at the 4-day and a 9-day moving average. Step 3, we want to identify where the 4-day moving average crosses over the 9-day moving average, because that's going to give us a buy signal. And then the 4th step is we want to look for the sell signal, and that occurs when the 9-day moving average crosses over the 4-day moving average. Now I realize this probably doesn't mean anything to you right now, but trust me, it's going to become clear in the next video. So for now, if you just write these steps down, and then in the next video we're going to go through them step by step and look at them in more detail. Now just a quick note before we move into the next video where I'm going to show you the examples. You should never use this method without stop losses, because if you don't, you're going to lose money. Remember what we said in the earlier videos. We want to, if we win, we want to win big, and if we lose, we want to lose small. And a stop loss allows you to lose small. If you don't put stop losses in, you are going to lose big. So keep that in mind. If your broker allows it, you got to use trailing stop losses, and I mean I love them because they allow you to lock in a lot more profit, and it takes a lot more risk out of it. If you don't know what a trailing stop loss is, maybe have a look on your broker's website. They will explain it in detail. Maybe I'll do a video later on to explain give you a bit more detail as to how I use the stop losses. But for now, just know you got to use your stop losses, and that's going to help you lock in a lot more profit. Okay, so in the next video, I'm going to show you, where to find these stocks to apply the method to, and then I'll also show you some of the best resources I use. I mean, they're all free, so don't worry about it. So yeah, see you in the next video, and then we'll look at some